I'm Amanda Morrall, and this is a special double shot interview. I'm standing here today with John Boddy. He is the General Manager of ANZ Wealth, and he's also in charge of the KiwiSaver provider for OnePath, which has just been nominated for the KiwiSaver Fund Manager of the Year Award. And additionally, they've also just been nominated the Fund Manager of the Year Award for New Zealand. So congratulations, John.
Yeah, thanks, Amanda. We're very pleased. It's a great recognition from the industry about how we're helping investors out.
Now, this is the second year that you've been nominated for the KiwiSaver Provider of the Year, which is quite something to be 2 years consecutive. What would you attribute to your, they applauded you for your consistency in your performance. What do you reckon your success is owing to?
Yeah, look, there's a few things. I think firstly, performance does matter. And being consistent, so not trying to be number one and then go to number 15. So give investors a performance they can trust and reliability. We think commitment to communication with investors and disclosure of things like the fee structure and what's in the portfolio. So I think it's that combination of performance and actually being seen to be committed to the investors and helping their retirement.
So you've had a few challenges this year with some staffing changes, but they acknowledge that you kind of overcame those. Can you tell me a bit about what happened on sort of a management level?
Yeah, we made a couple of changes. Firstly, we hired Simon Bothaway, who's an experienced New Zealand investment professional, to give the team some overall leadership. And we then made some changes in terms of bringing together two separate investment teams we had, which involved a couple of people leaving the business and a couple of new people coming into the business. But in general, we just wanted to strengthen a couple of areas that we felt were not as strong as they should be. But those changes went very smoothly. And hats off to Simon for kind of making them and bringing the team together so quickly.
Another thing that Morningstar acknowledged you for was your transparency with respect to fees, and you are known to have quite low fees relative to the returns you're generating. How are you able to kind of sustain those lower fees, and what's your philosophy in general with regards to fees? Because it's kind of emerging as one of the key areas in which you can do well at a KiwiSaver if you monitor those fees.
Look, I think fees are important, and there's two parts to fees. Clearly, transparency. Fees have to be more transparent. The industry has to commit to increased transparency, and we want to lead the way on that. And I think the industry is very keen to follow. The second part is the fees have to be fair to investors. They've got to reflect what the investor actually gets in terms of value. So, clearly a conservative default fee should be lower than an aggressively actively managed fund. And we think we've found the right balance between being able to invest enough to get the returns and charging a fair fee to the customer.
Now, your default fund has done phenomenally well, 5.2% per annum over 4 years. At the same time, default funds have taken a bit of there's been a bit of criticism about people maybe languishing in these funds unnecessarily and potentially robbing themselves of future returns. What evidence is there, given the strong returns you're getting out of this, that people should move into a more aggressive sort of fund like that you get in a growth fund?
Yeah, look, I think from our point of view, we look at it in terms of 40 years, not 4 years. So an average investor, 25 years old, they're going to be in KiwiSaver for another 40 years. Now, I'm pretty sure that bonds aren't going to stay at 3% and equities aren't going to stay at current levels over the next 40 years. So it's about balance. It's about being in the right fund at the right time of your investment horizon. Let's not get excited about conservative funds because of 4 years performance, just like we don't want to get excited about equity markets when they're reaching record highs.
What do you see the challenges for being, going forward 2012 and beyond?
Look, I think firstly performance again will be challenging in terms of the volatility of the global market. What's going to happen in Europe? Is the financial stability we're seeing in the world going to start becoming real growth? So there's always that macroeconomic return challenge. Secondly, we've got a milestone this year where people start to leave KiwiSaver. So the 5-year KiwiSaver period. So making sure that investors don't think that's the end of retirement saving. So at 65, how do we help those people for the rest of their retirement? And then thirdly is keeping the current debate about retirement savings front of mind, because I think it's been really healthy since the election that retirement savings has been a topic that a lot of people have spent a lot of time on, and I think that's really great for the industry.
Well, John Boddy, congratulations once again. I'm Amanda Morrall with interest.co.nz, and this has been a special double shot interview from Morningstar's Fund Manager of the Year Award, where OnePath has been nominated 2 years running KiwiSaver Provider of the Year.